Morning. Somewhat tumultuous markets ended up trading mixed yesterday. So clarity on the presidential election thanks to the official nomination by the Electoral College of Joe Biden, and then also developments with regards to vaccine production and distribution were seen as positives. On the less positive side, though, there's still an alarming number of cases and an alarming contagion rate and uncertainty about a stimulus bill that would support the economy. So that was negative. We saw the dollar drop and retest recent low. We saw equities jump up and then retrace later in the session. Bonds were bought in a classic risk-off move, so pushing the 10-year yield down just below 0.9%. Gold fell as well, and then copper, which I typically like to see as a good indicator of global economic activity, retraced for a third session and looks set to go a bit lower. In those markets, it's actually nice to see that crypto is holding up well. Bitcoin just closed under 1% up, so decidedly above 90K at 19,300. Ethereum is closing essentially flat, which is not bad, at 588. Chainlink, Polkadot, Litecoin, Stellar had similar sessions, so closing flat. And then Cardano and Bitcoin Cash, interestingly enough, were up, copying Bitcoin instead of Ethereum, it seems. That's a recap for yesterday's session, but what now? We're close to 20K, which is a big round number that gets people either excited or anxious. In the last 2 or 3 weeks, we've seen that clearly there's enough selling pressure to stop prices from going higher, so going further than 20K. And then the on-chain economics, we're seeing conflicting signal. The USDT market cap just hit 20 billion US dollar. That's a lot of dry powder to buy Bitcoin or cryptocurrencies in general. But then conversely, we're also seeing the deposits on exchanges are still rising, suggesting that large players are ready to sell their coins, basically, or getting ready to do so. On the CME, the commitment of trader, the COT, shows an increasing bullishness by retail investors and then a continued bearishness by hedge funds. And so one would assume that that spread, which has been widening, should eventually narrow. In any case, the coming days will be fascinating to watch. Last week, we could have closed deep in the red in kind of a bearish engulfing pattern, but actually we ended up bouncing back up over the weekend and then forming a long bottom wick, which is typically a bullish signal. So it'll be very interesting to see if this week is a continuation of that bullish sentiment or if we retrace down a bit lower and kind of kill the momentum we've seen in the past month or 2 months. That's it for me today. If you haven't done so, please like, please subscribe. That helps with the visibility, but also means you'll be updated for every new video. And then in any case, I wish you a great day and a great trading day.